Well, what's been amazing to me, and I think this has been true for most of this year, when we hear from two different voices in the White House as to how the progress is going, the market has two different reactions. All along, we've heard from Trump that we're making good progress. But Lighthizer has the ability to bring us back to reality and saying our goals are bigger than what we've accomplished so far. But at the end of the day, Trump gets to decide what we're going to do here. And I think that we are closer to making a deal. It's going to happen sometime in the front half of this year. And that'll be one headwind that we can put behind us. My biggest concern is we've priced that in, or in large part, we've priced a lot of that in. So it's going to take something new in terms of a catalyst like the Chinese economy stabilizing because of this.
Peter, anything from Powell catch your ear today? Or?
Well, I think with Powell and the Fed in general, they're saying we're going to explain how this balance sheet management is going to work. And just as important as the calculus behind the balance sheet management is the psychology that they're trying to control. Because I think if the Fed could control all parts of the yield curve, they certainly would. And that's what they're trying to do. But the psychology, the psychological aspect of it is really important. I think that Powell's done a great job in testimony this week of explaining to everybody where they stand, saying we have a plan. I expect we would see it certainly by the March meeting, but I think generally that's given investors a lot of confidence, particularly with the trade talk stuff, because I think we'll always see something that says we made a deal. I think what we're at risk of is seeing something that deal doesn't really have any teeth, because we're asking a lot of China, and that's going to be hard for them to stomach, and I think it would be a little naive to expect that we're going to just automatically go to that place.
Art, how do I invest in a market that has no other visible catalyst that's up 12% so far this year? Should I just call it done and go home?
You have to ignore Brexit possibly being a negative catalyst, Venezuela being negative, India, Pakistan being a negative. Yeah, we've got plenty of things to be concerned about. I think the China
trade. You've only given me negative catalysts, though.
But I will tell you this. I think that we get a deal that's good enough to stabilize both the Chinese economy and the global economy in the near term. And I think that the stabilization comes from the fact that deferred decisions by businessmen will now be made. We know where we stand. We know where our complex supply chains look. I think that's going to help a lot, but that's going to take a couple of months. That's why I think that getting to 2,800 is going to be a journey, and that's why we're running into resistance there.
You know, Peter, Art mentioned that probably the idea of some sort of positive outcome with the China-U.S. negotiations may well be baked into the stock prices already. Is most of the other good news similarly also baked into stock prices, and is now the time to get a little more cautious? Have I made my best money for the year?
For the year, I mean, we've definitely had explosive growth in stock market returns from Christmas Eve effectively to now. And I'd say where valuations are and where starting interest rates are and where the risks lie, and the fact that the leading economic indicators, a number of them are deteriorating, I think you have to have a plan in place for understanding that we could be near the end of a business cycle. And that's not necessarily to say that any recession is as bad as the last one. And oftentimes recessions happen and they're over by the time we even realize that it's been called. But yeah, I think if you don't have a plan in place for a downturn, you know, this is the time. And I certainly think you need to be reaching out to your advisor, talking to them about those things, because if we look out 10 years, I would expect returns to be lower over the next 10 years. That doesn't mean it's
than they were.
Lower than they were, sure. Yeah. I mean, I think where you look at starting valuations and where yields are, it's hard not to think of scenarios where returns are below historical averages. As we look to the next 12 months, like 10% downturns, 20% downturns, those are historically pretty normal. What's going to cause them? I don't know, but there's certainly a lot of opportunities that people could latch on to start that sort of selling.